Hello, everybody, and welcome to Confident Compounding with Corey Kramer. Today, we're going to be going over, I think, 8 healthcare stocks. I've had a lot of requests for updates lately on several of these, and one of the members over at the Cyclical Investors Club suggested that I do a follow-up. So I said, you know what, let's just run kind of through all these and where I kind of stand on them, and then my overall thoughts, strategies, kind of what I'm actually doing, because it can be a little like mixed up. It's not very straightforward. There are a lot of unknowns. And so this is kind of going to be a video about how to deal with some of that, what I expect, what I've done. You know, a lot of this channel is me just sharing what I'm doing and how I approach things. This is definitely going to be one of those cases. So the stocks we're looking at today are Cigna, United Healthcare Group, Elevance, Molina Healthcare, Centene, Humana, Oscar Health, and CVS Health. So I'll get back to that spreadsheet in just a moment. I think since the last several videos I've made, Elevance has fallen, well, the most. Now, I just made a video on Centene because I just bought a little bit of it. But I've made several videos in the past, I think, on Elevance because I bought it back. I think I bought it back in early 2023, or maybe down here on this dip here. Or let's see. I have one position that's even. So I actually must have bought that one in 2020 at first. But I've made a lot of different videos. Now, I recently, and I think I made a video on this as well, on February 28th, I sold half of my Elevance position and half of my Cigna position because things look like they were getting like the future, near-term future was getting pretty shaky in terms of earnings. So, and a lot of that had to do with the government. Most of it did, honestly. And so that ended up being a good reduction. I mean, I suppose it would have been better if I sold all of them, but I didn't really have any real evidence yet that it was going to be as bad as it looks like it potentially could be, at least stock price wise. And then, so I reduced that position. I reduced Cigna on the same day. Cigna has done fine. I mean, done better. I think maybe it's just down slightly since then. But overall, it hasn't fallen off as much of the other healthcare stocks. They all seem to have, and then United, UNH, right? Yeah, United Healthcare. Again, I made an individual video on this, but it's fallen even farther since then. And it has its kind of own little individual issues. So I'm going to go back to my spreadsheet here. And I'm just going to go through and just share my thoughts on each one and in the group. If I have any history with them, I'll share that too. And then I'll kind of share with you how I'm thinking about kind of the bigger picture as well. Okay. So let's start with an easy one, CVS. So I've been bearish on CVS forever, basically, because their earnings growth has been, which is this column right here that I'm highlighting, has been really slow. So that's too slow to interest me even before we had any of these issues. They've had a lot of like M&A and things like that because growth was slow and it hasn't really worked out very well. So I don't even have a buy price for them. They're just an avoid for me. So that's kind of an easier one. Another one that falls into a different kind of category is Oscar Health. So I recently added this one this year. It was actually a weekly pick a couple months ago as well. And I think my original position is still positive on it. But I consider this actually a growth stock. So if they can grow earnings at like 20% a year going forward, we can take a look at this one on the, I'm not going to do all the calculations and everything here. If you join Patreon, my weekly picks Patreon for $25 a month, I have video on Oscar Health over there where I get into like the specifics and stuff. But the main thing that I was looking at is, and this has kind of changed, I think, probably since I bought it, but if you look a couple years in the future, what earnings are where they're supposed to be at, and you can assume that they basically just grow at like a 20% rate from here. Then, and it's only a $3 billion company. So they have plenty of room to grow. And if they can grow at that rate, then they're a pretty good buy. I don't know what the PE is, like 40. So it's expensive, but the growth potentially is there. So the future all comes down to whether they can grow that fast over the long term or not. So the approach with this particular stock is buy it, hold it 5 or 10 years and see what happens. So I have a 1% weighted position in this one now. I bought it at 2 separate times. So I have more of this one, but it really does fall into a different category, more of a growth stock category, where the rest of these do not. Not fast growth, right? Not like 5x over 10 or 15 years. Like that's kind of what I have in mind with an OSCR when I'm buying it. So I expect it to be volatile. It's actually been crazy volatile lately. As soon as I bought some of it, it jumped like I don't know what kind of jump this is. I don't know if my fast graphs is working right today, but oh, it is a million. I don't think that's right, but it's being so janky. I don't know why it's doing that. They did an update the other day, and it's the only thing that I've noticed that's glitchy is this 19,000%. Okay. I don't think it went up. I don't think the annual, oh, maybe it is because it's just such a short time period. Yeah. So it went up like, it's actually right, but it went up like 50% in a month or something. So, and now it's come back down. So this one's kind of been all over the internet. It seems like, cause I see a lot more people talking about it than probably should be talking about it. I mean, I do think it's an interesting stock to see what happens, but I don't think trying to trade this short term, is the way to go. Try to buy it at a decent price. I think it's at a decent price now for like a half. I probably wouldn't buy as much as I have, like a full position, which is like 1% of our portfolio, but like 0.5% now, and then see if it starts to get some positive momentum. Maybe it doesn't do that until it's way down here again, and you can get it a little bit lower. I don't know what's going to happen, but I think on a valuation basis, it's okay to add like 0.5% weighted position, like small position. And then to give it some time here, when things are kind of crazy, it could fall a lot. If earnings pan out in the next quarter, 2 quarters, 3 quarters, and the stock price starts going up again, and it looks like things are kind of on track, then you could always add more. So I have more in this than I actually do the others because I reduced Cigna, I reduced Elevance, and those were actually positive from the time that I bought them. So I had 1% positions in both. It probably combined were 3.5 at one point, weighting. So I reduced both of those, but I'm treating them differently than OSCR. So CVS, avoid. OSCR, growth for the long term, buy a little bit of it, and then just forget about it. Come back in like 3 years and see. You may look at it to see if you want to add more, but it could fall 50% pretty easily. Any stock that's at a 40 PE, it looks like now they expect earnings to fall a little bit next year. Could easily trade back down here, like at $5. That's way more than 50. It could fall like 75% and still be okay over the long term. If this year is just a rough year and they transition and make adjustments and they go from there. So, and I don't know whether it will do that or not, but you've seen in the past that it has. Now, they weren't even profitable back then yet, but so it's more a strategy on dealing with the unknowns and at least kind of making the best or most reasonable bets that you can. So I think that one's okay for a 0.5% position. Humana, they started having problems before everybody else, and I was wise, I think, to avoid trying to buy their dip. And I've made individual videos on Humana. Almost all of these, I think. I didn't make one on OSCR. That's over on Patreon. But I didn't buy any of this dip. I made a long video talking about it. People complained because I explained too much about avoiding buying these and how I did it. But I think that's important, even though it's a little bit of an experience thing, just having the experience to make a borderline call that's kind of the right call. And so far it has been, because the stock keeps going down. Now they have some forward, I think analysts can have some forward visibility because these guys make a lot of their money from like government payments. So it looks like earnings are still going to fall next year. So there's not really a reason to kind of try to buy this one on the way down too much. I mean, you want some signs of life because we really don't know kind of where this is all going to bottom. And so my bias here is caution, but I do keep an eye on it. So, you know, if I look around and I have a lot of cash, maybe the rest of the market's really high and things just kind of start to turn around for them a little bit, okay, then maybe I'll come in and buy a little bit. But for the last 2 years, I've basically just been watching this one fall, and keeping an eye on it. And I said, I'm sure I said back then, I didn't know how far it would fall, and I still don't. I don't know if this is going to be the bottom. That's back to 2018 levels, so it seems reasonable that it could bottom there, but you know, who knows? So I'm just watching that one. Well, I'm watching all of them. So I just made a video on Centene. I bought a little bit of that one, okay, because it fell 40% in a day. I don't know what earnings are going to do. Let's see how bad they look now. Okay, yeah. So I bet if you go back in my video, I didn't say what they would fall to, but I probably knew what the market was pricing. So what are we at? 285. Now they haven't actually gotten to 285, but that's back at kind of this level here, right? It's actually now it's fallen more since then. So it's pricing in, yeah, like $2 a share pretty much in earnings. And you got to think about the medium term with all these, I think, that I'm talking about now, and not the short term. We know the short term is almost certainly going to be bad. Their earnings are going to be falling off a cliff. So if you buy these stocks, you have to think 2, 3, 4, 5 years in the future. I would say like 3 to 5 years in the future, because there's kind of a chain of events that can happen. Once people actually feel whatever the policies are that are in place, particularly coming out of the government, if they hurt people enough, if they feel enough pain, then they might demand changes in the other direction. So it might get overdone. And will that happen? I don't know. I don't really know for sure, but I know that the market, there's probably a bigger likelihood that the market, when something is falling 40% in a day, could be overreacting over the long term. There's at least a decent chance, right? I mean, we're down at a price we haven't been at since, were we even there here? Barely. Since 2016, so 10 years ago. So even if these earnings bottom, let's say these earnings bottom here, at 2 something a share, and then they have a similar rise that they had over the 5 years after 2016, the last time it was here. So we know the market was willing to pay this valuation then. So let's go forward 5 years. 1, 2, 3, 4, 5. Okay, so that's a 250% return in 5 years, if things trough and recover eventually. Now, they might not recover as fast as, I mean, I would think it would take 2 or 3 years at least for the earnings to kind of figure out where they are, the business to make adjustments, maybe the government makes adjustments, maybe, you know, the way things are done are adjusted, whatever, and for the earnings to start rising again on a new uptrend. But we don't know where the base of that is. We don't know how fast it's going to come back. We just don't know. You just have to guess and assume, if you're buying this, that they'll start moving in the right direction within the next like 3 years. And the stock price could fall very deeply still, but it can also bounce back, right? Just in this 2-year period here, how fast did it bounce back? Bounced back 200% in 2 years. So we know the capability is there, and it's worth, I think, a nibble, even if you don't know exactly how it's going to turn out. But you should not be surprised if the market, because right now short sellers are piling in. Once there's signs of life, the stock can rise 30% in a day, right? Because all the shorts will cover. There'll be a short squeeze, and then that you're not going to be able to know when that's going to happen. It's just going to happen. So you kind of want to hold the stock whenever it happens, and then you're holding it already, at least some of it. So small positions, I think, are reasonable on the way down for some of these. And then if it looks like there's a bottom starting, then you can maybe add a little bit, which is kind of the story that I'm telling here. Molina, I haven't bought yet. We can take a look at that one real quick. And again, at the portfolio level, I only have a 2.5% weighting in all these combined. Looks like they had a big sell-off here. So their earnings are shifting negative. Stock price is falling quickly. I think they have a decent amount of debt, it looks like, just glancing at that. So yeah, the market's getting pretty negative. you know, I'm not in a hurry really because I just bought a little Centene, but maybe next quarter I'll look, and if it's still down here and maybe starts to rise a little bit, if I still have extra cash, if you don't have a bunch of extra cash, but maybe you're dollar cost averaging. So on my weekly picks, I share the best stock I can find each week. So maybe Molina will eventually be one of those when, look, there's maybe the market's pretty much at all-time high. So there aren't very many things that are at good values right now. And if you really want to get that cash to work, then that's when you kind of nibble at something like that. Okay. Same goes for Elevance. I think now I have a 0.5% position already that I bought way back whenever. I think adding like a small position is fine here. So you see it's a current buy along with Centene. United Health, again, has its own issues. Like I just saw, it sounded like they might have been cooking the books a little bit. I didn't read too much into it because I'm just still kind of watching it. But you're getting a bunch of negative news dump on them with all the stuff that's going on there. And there's been kind of a real backlash against them in particular. I believe the CEO was left. I made a video on it too a while back. But my buy price for it hasn't hit yet. It's down closer to $200. I would review it before I bought it, but I probably wouldn't buy any before then. This is one that has really gotten creamed. So this was a darling, an absolute darling of dividend investors, especially, and kind of buy and hold investors. And we can see that it's down more than 50%. So I'm at 203. I think I've probably been there for a while, and I could get more conservative on that. But again, you look back and like 2020 bottom is at 203. So there's maybe some technical support there. So this is one, maybe if it gets down to that 200 level, I'll add a little bit and then I'll wait to see however long it takes for it to kind of bottom and come back. And then you get more information along the way too about how things are looking in terms of policies and, regulations and government payments and all that kind of stuff. So yeah, I'd probably nibble there. And then Cigna, I have a 0.5% position. It's not close to a buy price. It hasn't really sold off as much as everything else. So I think for most people, that one's probably not going to hit, I would imagine. So yeah, I mean, so we're down to, so I already have a full position in Oscar, so I'm not adding to it. I only have a 2.5% weighting. So 0.5%, 0.5%, 0.5% to full percent. I could add a little Humana at some point, maybe, but it's just not, it's really ugly right now. I'd be more likely to add to Molina. If I felt like I wanted to put some cash to work, that would probably be the next place I would go. And then if United Healthcare got down to that 203 level, I would probably add a little bit there. And so that would only bring me up to like a 3.5% portfolio weighting. That's still not a lot. I don't know how much more I would add on the way down. I would probably wait to see, because it could be a while. You could be sitting on these for quite a while and they could all go down more. So you have to kind of know your own tolerance for volatility, negative news. I don't see any good news coming in the next year. The only good news is going to be the market gets so negative that they post earnings that beat expectations, and that can start to form a kind of bottom. And that could happen at any time. So that's why you kind of buying a little bit now isn't such a bad idea, because you don't know when the beat's going to eventually come, and you don't know how low the stocks are going to go. So it's really just, you kind of sort through things. You look at your portfolio, you see how much cash you have, think about how much overall exposure you might want to have here. You understand that a lot of this is going to have to do with the government. And so a lot of that's changing right now, and we don't know how that's going to turn out, but we have to be aware that can change, right? I think a lot of times the market is so near-term focused that it can't even look out 3 years. We have 18 months until there's another election, and then in 3 years we have another election. That sounds like a long time, but the market will probably start to price in things ahead of time, and the businesses themselves can make adjustments themselves to try to run better, figure out different ways to do things. That's kind of what they do. So they could limit those earnings losses themselves as well in the meantime, and maybe put a bottom there, and just see what happens. So I don't think I'd go over like a 5% weighting total for this whole sector. I have other healthcare stocks that have been beaten down to really the whole healthcare industry. I've nibbled here and there. I owned a few, and I still do, and they're all not performing well. So I think over the next like couple of years, you kind of, the whole thing in general, you're just kind of nibble a little bit, wait a little bit, nibble a little bit, wait a little bit, and when it turns around, at some point, then you'll capture that turnaround, rather than going all in on, I'm sure there's some people that put a bunch of money into Centene when it fell, or they put a bunch of money into United Health when it fell so deep. I don't think that's the way to do it, because these businesses can have really bad individual issues that come up. We see it just in the different problems that each one of them is facing. They're not all identical by any means, even though they're kind of in the same group, like same sector and industry. So that's not what most people on the internet do. They like to have really bold predictions. They bought United Health they told you it was the best value in the world when it was probably like right here at 450, and now it's down here, 40% lower 1 month later. And if you put 5% of your portfolio in that, I mean, you feel that damage. The same could be said with some of these others that have kind of fallen, Elevance, some of these others that have fallen off a cliff. So I just encourage people to stay balanced here. Don't do anything, extreme. And if you kind of nibble a little bit more on the way down and then nibble a little bit more on the way up, it will have it whenever they recover, assuming they recover, they'll have a positive effect on the portfolio over time, because there's other parts of the market that are doing fantastic. And hopefully you have some exposure there. And this is the next group that maybe in a couple of years is going to be the one that the market decides to like all of a sudden, or that the economy kind of tilts more in favor of. And we don't know if that's going to happen right now. But it does happen sometimes like that. So I don't have a bunch of clear guidance when it comes to this sector, but just stay balanced and nibble your way along. And I think that's going to be it for this video. If you found this useful, hit the like and subscribe button, and I'll see everybody later.